So we're looking at MicroVision, ticker MVIS. We're down about 5% on the day, which is quite a big move considering we were up relatively big on the day. We closed around yesterday 7, hit a high up about 15% on the day of around $8. And now again, we kind of came back down to the gap fill, and now we're breaking even lower. Now, quickly from an intraday perspective, now we need to be cautious. If you were long bias at this stock, looking to play this to the upside. So obviously we've been trading below the intraday VWAP, which again is usually a bearish sign as it is. But now what's happened as well, here we have the 2-day anchored VWAP. We've also now broken below this. It looks like we're coming back to retest it now. So if we fail this retest, and again this is around 675, 670. If we fail this retest and continue down again, going to be quite bearish on the day. Not going to look to try and catch this long if you're below the 2-day anchored VWAP as well, at least from an intraday perspective. Now we can zoom out, go into our key deviational levels. Now, one thing to note, and MVIS does have options. One way I'm looking to trade this, or kind of have actually got some size in already. So quick disclaimer, I do have a position in this now. Probably be locking in the profits today though, because it's already up about 40%. But that's by playing credit or debit spreads. Because again, short or getting shares available on this can be hard to borrow. So again, potentially not being able to trade this. So that's one problem. If you're trying to trade the actual shares, it is going to be hard to borrow. So depending on your broker, you may not be able to. So again, that's why I've gone through the option route. Credit or debit spread, you get that defined risk, your defined upside. But in a case like this, when you are extremely overbought, you're more than likely going to pull back. To me, it's more than a 50% chance that we pull back. So even if it's a 1-to-1 risk to reward, you're going to have more than a 50% win rate. So what you can see firstly on the 6 month, so again this is a 6 month chart on the left, on the right we have a 1 year chart. Anything above 490 on the 6 month is extremely overbought. So anything above here, we're extremely bearish, and we can see we're up nearly 100% from that high. Now what we can see as well on the 1 year, our extremely overbought level is around 550, and again we're up near, well, probably around 50% or just under 50% from that high. So again, these are things to be cautious. When you're that extremely overbought, I'm only ever looking at these stocks short buy. Sometimes I may not want to short the momentum, and if so, then I won't trade it. But most of the time, if a stock's up at these highs, it is going to pull back. And if I don't want to play against the momentum, in the sense I don't want to be shorting shares because there's a lot of risk on the table, I will find some sort of defined risk strategy. So it might mean shorting shares, buying the calls to hedge if we can. In this case, couldn't short the shares, so instead went through the debit spread, credit spread strategy. Because again, whenever we're over here, extremely overbought, and that's what I mean as well, is we don't really have any resistances. The highest resistance / support we have is at 650, and we can see that's actually kind of where we come back to now. But anything above that is extremely overbought. Again, not something I'm looking to touch. And even this 650 and these 560 are levels I don't really trade off or pay too much attention to. These are the fourth deviations. From an actual standard deviation standpoint, no one really pays attention to the fourth deviation, so I like to use it just to kind of get a gauge if it does break out of our third. But the main focus is always on the third, and as we can see, we have broken above, and we are still above the third deviation, so still quite bearish on it until at least kind of that $5 mark. Then it's still overbought, but at least it's come back to a more reasonable level to start trading within. So again, that is going to be the key basic analysis right now. Overbought, something I personally would never be touching long. I think it's too overbought, so I'm quite bearish on it. So again, we covered the support. We have 650 we're covering now. Then we have the range of kind of 550 or 540 to 565. If we break that, we then have 490 as a support, and then if we start to break that, we then have the 440, 410 or 415. And if we break that, a kind of a key support at 330. So these are the main levels I would be paying attention to on the way down. And again, if we were holding this short bias, these would be all our targets on the way down. Now, when a stock squeezes this much, what you tend to see is either they collapse very quickly, and if it does, then we could use that 340 as a target. However, if we are shorting this stock, we're trying to lock in profits, and it's kind of moving slowly. Like today, say we close around 6, tomorrow we do 550, and then the day after that $5. Yes, we're still moving a big percentage move, but considering how overbought the stock is, it's still relatively slow to the downside. So then I probably wouldn't be using that 330 as a key target, because I think it could take too long to get there, or we're just taking on too much risk. And in that case, I tend to use the second deviation as that key target. So kind of 215 will kind of be that lowest target I'm looking to get completely out. So again, by 215, I'm completely out of all the shorts. But again, we're moving quite quick today, so I locked in a tiny bit to 650, and we'll probably lock in the last 2 or 3 credit spreads coming into kind of 550 if it moves there today or tomorrow. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.